Welcome everyone to Frontier Opening Bell. I am Bosun Omofaye and I'm happy to be with Ali Kansachi today, Tuesday, July the 28th. Ali Kansachi, CEO and founder, Rich Frontiers Management in Nairobi. Good morning, Ali.
Pleasure. Thank you, Bosun.
Hope it's all good in Nairobi.
Is.
Here in Lagos, a bit cloudy morning. Ijoma Onyeka is joining us from Vertiva Capital. Is the head of industrial goods analyst at the investment banking and securities firm. Ijoma, thank you very much. It's good to see you.
Yeah, Bosun, it's my pleasure to be here.
We appreciate your time. Not a particularly bad day for a number of our Frontier African equities market to start Monday, yesterday, the first Monday of the first day of the week, the last Monday of the month. Nigerian market was up nearly 1.5%. The Kenyan market was a very solid 2% to the north. The South African GSE was 1.22% in the green. And of course, in Egypt, the market continued about 0.5% in positive territory. The Ivorian market, the BRVM, went to the negative territory, the opposite direction, 0.13%. Let's move on and see what are the top stories. Of course, the breaking news this morning was that an independent panel set up to review the ethical committee's report against Dr. Akinwumi Adesina of the AFDB has cleared him of all wrongdoings and confirmed the earlier report filed by the ethics committee. Adesina is now cleared to run for a second term on August 25 to 27 at the annual meetings in Abidjan. That's a big story. But again, if we come back to the East African market space, where the market was very solid yesterday as the three-day morning for the former Tanzanian President Benjamin Mkapa continues. Kenyan banks want a lifting of moratorium on loan defaulters. Nigerian authorities are also battling how to deal with the same issue. Uganda is opening MTN share sale to East African community only, and but again, if you look at the Stanbic Holdings yesterday, a major gain by this financial services company on the Uganda Stock Exchange lifted that small securities exchange out to 1.62% on Monday. In Uganda, sticking still with the country, Umeme is seeking a review of free electricity connection policy. It's all about electricity and electricity. Of course, here in Nigeria, we're dealing with a similar story. Ali, coming in here for the East African market for us.
Yes, so morning, Bosun, and thank you for having me. So let me first start with the president here in Kenya made a speech yesterday where he extended the curfew for another month. This is a curfew running from 9 p.m. to 4 a.m. He also introduced some further restrictions, particularly around alcohol being served in restaurants, and this is ahead of international flight reopening in August. And I think what it speaks to, Bosun, is this catch-22. Most of our policymakers are in. They can't afford to keep the economy locked down anymore. The cost for their citizens and for the economy is too great. But at the same time, Kenya, Ethiopia are seeing an exponential increase in the number of infections. So it's a little bit of a catch-22. Kenyan banks calling for the lifting of the moratorium on loan defaulters. This is another problem in the sense that this was a 90-day initial moratorium that was introduced in order to give people relief as we entered this COVID period. And now the banks are saying, look, we can't afford to let it run any longer. And this is going to be a serious challenge, I think, for banks here in East Africa and probably over in West Africa, is that I don't see where the rebound is coming. At the moment, we're in this catch-22 situation. Earnings are down dramatically across the board and for borrowers, and therefore this is quite a complex issue to deal with. Uganda's opening MTN share sale to East Africans. I think that's precisely what we should be doing across this continent. really maybe we should be thinking Pan-African as opposed to East African, and that would be a great step where we invite our citizens to participate in the ownership culture. We sell these shares with a discount, so people are making a profit from day one. It's hardly rocket science. The likes of Mrs. Thatcher did it in the United Kingdom. And I really think it would be a win-win and develop and open up our capital markets. Stanbic Holdings is the biggest bank in Uganda. It was listed there a few years ago. And that's a bullish development because it's such a big piece of the Uganda Stock Exchange action. Umeme seeking a review of free electricity connections. This has been the problem in Kenya. The government got this loan from the World Bank and connected 1 million extra clients to Kenya Power. But what happened was the power consumption that this incremental increase of people were taking on board did not pay for itself. So this is a challenge, I think, that we're going to see among many different countries on the continent. You know, the game is, it's all very well is talking about connecting and electricity, but if the consumption is not there, it's not a profitable business. And I would be looking at things like off-grid power, solar, things like that, where you can do small grids in hard-to-reach areas, and you don't have to put that burden on the balance sheet of your main electricity provider.
Interesting how we can break it all down using the various energy resources within a particular country and try to break it out to little pieces so that it reaches the people below at the bottom of the pyramid. It's not a game changer. You have hydro, you got wind, you've got solar, so you just bring it on. For example, in Nigeria, you could do solar for the entire northern part of the country and take them off the national grid that comes from gas from the south, and then across the Niger and River Benue, you can do hydro, right? And then you can just do a bit of gas for the southern part of the country. It makes it all simple sense, and just break it all down. You just use the resource, and the cost of producing this electricity and the cost of distribution and connection will be very cheaper when it comes right next to where the people who are going to use them. But again, it's all complex thing when we can just break it into smaller units, like you said, and we could just get to move on. But again, that's the story for the continent. We keep battling this and hope someday some fiscal policies will see through some of these issues. Let's talk about the Nigerian and the West African market a little bit. It's our earnings season, and I'm sure it's earnings season also across the continent. But for Nigeria, the numbers are coming through. We're getting stories from the industrial goods sector. There's some of the big names, Lafarge, Dangote Cement, and some are coming through overnight from the agriculture sector, which relates to Nigeria's non-border closure. We want to know more about that. Meantime, SEC Nigeria has appointed a new executive commissioner from Eternal Oil. Ibrahim Boyo will be on an executive commissioner. This is one of the first few appointments being made by the new leadership at the Securities and Exchange Commission. Ghana yesterday left the central bank left monetary policy unchanged, 14.5%, talking about monetary restraints, as it were, looking at what has been done and wait until they have some effect on the economy before they go for another haircut. Meantime, Burkina Faso is listing a 6.5% paper 2020-2028. That will be later next month, in about 3 weeks from now or so. Then Kane Energy is swinging its 40% stake in Lukoil for Russian Lukoil at about $400 million. But the earnings is what is tickling everybody's ears and trying to feed in what comes from the fiscal space over the last 1 year within the Nigeria space. Later, allow Onyeka from Vertical Capital to speak to this to us. In particular, the earnings from Okomo Oil.
Yeah, so we saw Okomo Oil release their results yesterday, and they released largely impressive results. We saw PAT go up by around 58%, and revenue was up by a similar percentage, went around 58% also in the first half of the year. And it was actually driven by, it was largely driven by, growth in the second half of the year. We saw revenue go up by around 51% year on year to 6.5 billion naira. And we recall that this is a positive development from the same position last year, where they reported 4.3 billion, where they reported 4.3 billion due to challenges in terms of CPO pricing. We know that prices of palm oil in Nigeria were going down last year because of an oversupply that was caused by illegal smuggling of oil palm into the Nigerian market. However, since the closure of the land border and the restriction of mobility due to the pandemic, we've seen a sharp drop in illegal smuggling activity, and this has sort of corrected the oversupply of palm oil in the Nigerian market, and we've been seeing the impact in the top line. Even in terms of gross profit margin, there was a 7 percentage point improvement in gross profit margin from around 80% last year to around 87% this year. Operating profit margin was also up slightly, but the growth in operating profit margin was less than gross margin because we saw we started to see the impact of the inflationary pressures of rising inflation on the administrative expenses. Overall, PAT was up by 30% year on year in the second quarter, taking first half profits up by 58% year on year. So they had a very impressive result. Looking ahead to the second half of the year, there's no reason to expect that this performance is going to drop because demand for CPO is likely to remain constant or even improve. Even with an economic downturn, the oil palm as a product is largely defensive because its uses, which are food and personal hygiene, are always going to be in demand.
I agree with you. You need palm oil in soaps and detergents. And with this pandemic, folks are trying to be a lot more cleaner at home. And everywhere you have kids closed, schools closed, children at home. So they're washing hands, they're washing their clothing, they're keeping the toilets and everywhere clean. So anyone who has raw materials that go, keep raw material ingredient for this product or personal hygiene and whatever will surely be smiling to the banks, as we have seen. We'll talk about Nigeria's construction giants, Julius Berger, a little bit later on. You might want to find out how Julius Berger actually reported more than 1 billion naira net loss in Q2. That's Nigeria's construction giant. That's one story I'm sure Ali will be interested in as well. But let's go to the Southern African market where the rands tried to hold on to 16.4 yesterday. But the biggest story was the approval of the $4.289 billion from the IMF. Sources says this will be coming into the Reserve Bank in South Africa sometime in the new month. Meantime, Eskom Holdings, the GSE okayed the listing of a 258 million rand tap issue to get this utility giant resolve part of its problems. From the commodity space, Amplat's first half virus hits this profit by 7%. Headline earnings per share also dipped slightly, about 27 rand as well. Santam, which is an insurance company, is providing 1 billion rand in payment to support policyholders. And of course, the World Bank sounded very positive in its report yesterday, saying Africa's free trade area, if we get it up and running, which was suspended on the 1st of this month, was positive for our incomes, for our poverty level, as well as the impact of COVID-19. Ali, let's talk about this big money, almost 5 billion coming to Pretoria in a couple of weeks.
Yes, so this was widely telegraphed. We'd been expecting it for a while. Tito Mboweni, the finance minister, had been signaling it was imminent. What was interesting for me, one, it's a serious chunk of change. It's very material. The IMF put a bit of language around it, which showed that they are sensitive at the moment to how the money is being utilized. They said that they were going to be keeping a close eye on where this money was spent. It came under the rapid disbursement facility that they have to assist in the context of the COVID situation. Interestingly, the EFF, this is Julius Malema's party, were terribly unhappy, I saw on social media, saying that the government should have borrowed this money locally, that the IMF is a neo-imperialist institution. But, you know, this carries an interest rate of about 1%. The IMF has come to the fore. It's playing its role. I would prefer to see them much more intrusive about how this money is put to work, whether it's in South Africa, Angola, where there's another big package going to come through, or any other African country. I think it's important that there's some supervision on it. But this is a big deal, and I think it plugs what was becoming a very, very big gap. Your other headlines, JSC is okay in the listing of a TAP issue. Eskom, we all know, has got concerns around its balance sheet and around its borrowing. It will be interesting to see at what interest rate that goes out at. But essentially, this very low interest rate structure makes it very persuasive for corporates to be borrowing money in the debt market right now. Amplat's interesting development, because platinum has really started to perform in the last few weeks or so. I imagine it's something to do with the production. I think there were challenges when you had that hard lockdown. There were challenges in some of the mines, and I suspect that this profit dip, which isn't all that bad, 7%, is probably around the amount of volume of platinum that they were able to dig out of the ground. Santam talking the talk and walking the talk as well here, saying they've got R1 billion that they can help with their policyholders. Yeah, that's good to hear, because I mean, some insurance companies have been resiling from some of these policies in the face of the pandemic. So I think that's a good statement. Probably, you know, they've got a strong balance sheet. They can gain a lot of market share and a lot of share of voice in this sort of environment by making that statement. And then finally, the World Bank report was very bullish about the free trade agreement, saying, you know, it was going to be a win-win for Africa. This is a no-brainer. The sooner we get it, the better. I know some folks are resisting it, but really, I think it's about the free movement of our people and allowing them to be the entrepreneurs that we know they all are. And I, for one, am a great bull on this whole Africa Free Trade Agreement. And I just hope our leaders really get with it and get with the program.
Let's just hit the ground running. Whatever it is, let's make all plans possible and hit the ground running 1st of January 2021. I think that's the earliest date. If we hit it December 31st this year, I don't mind. We just need to hit it and ground running. We've put so much into this particular framework and reform, and we just can't let it go down into the archives, as it were. So let's get back to this story that interests me, Julius Berger, which is Nigeria's largest construction company. Onyeka, weigh in on these numbers for us. What are the underlying or on the undercurrents of these very negative numbers reported yesterday by JB?
Yeah, thank you, Dawson. Like you said, Julius Berger released their results yesterday, their half-year results. It was not great. We saw profits go down. We saw them report a loss position of 1.9 billion naira yesterday, coming from a 2.8 billion naira profits in the corresponding period last year. And all this was largely driven by a decline in revenues and a decline and an exceptional cost item in the second quarter. So in the first instance, we saw a 33% year-on-year drop in revenues in Q2. Revenue came in at around 46 billion, and this was largely driven by the restrictions, the reduction in the reduction in construction activity that came with the lockdowns in April, and also the economic downturn and uncertainty that has come, along with it. Looking at drilling down into the numbers, we saw that revenue from government, from the federal government, went down by 33% year on year, and revenue from the private sector went down by 34% year on year. So this was largely driven by the effects of the pandemic. And then because of the reduction in activity, we saw gross margin also reduce. It reduced by around 6 percentage points from 23% last year to around 17% this year. However, the largest, the most impactful item on profit was an over 2 billion naira FX cost, FX loss, which was driven by the currency adjustments that we saw in the second quarter of the year. Overall, Julius Berger reported a 2.3 billion loss after tax in the second quarter, taking their half-year loss to 1.9 billion naira.
I'm sure the industrial goods space will be closely watched again. But this is interesting story when we saw Lafarge Africa and Dangote Cement, two of the behemoths within this space, reported some very nice earnings during the period. While Julius Berger, which is also make good use of cement for road construction, whatever, reported a very decline. But again, you sorted that out for us. The FX, if you take a 2 billion naira hit plus naira hit on an exchange rate, which was done then around the end of May to June, then that's going to be very significant. 2 billion naira is a pile of money. Even if you load it into this room where I'm sitting in, or where Ali is, there is going to be a whole heap of money so to sleep on. So, but let's just talk about North Africa a little bit to begin to round up today's show. Within the space, the Egyptian market was up yesterday. Investors are still piling into Egyptian bonds, but not good news really from Fitch. Holding some good news, I beg your pardon, from Fitch ratings. B plus rating for Egypt in place, outlook stable. We've seen a number of negatives by Fitch and others from other countries such as Tunisia or Morocco getting a negative outlook. Egyptian gold prices up about 19 Egyptian pounds for 21 karat gold. I'll pick a gold now, hold diamonds a little bit. Meantime, Algeria's first quarter economy narrows 3.9%, inflation about 2.1% in June. Ali, let's talk about this Fitch ratings and the stable outlook on Egypt. This keeps cementing the outlook or the macro on this particular economy and the country.
So Fitch, frankly, have been slashing everybody's rating. So actually to be able to hold your rating is a very positive outcome. And I think Egypt would be pleased with that outcome out of Fitch. I was reading yesterday that they've downgraded about 20 African countries and they have about another 11 on negative watch. So I think Egypt will be pleasantly surprised with that. I think also this ties in with the very positive carry, benign interest rate environment out of the Fed, which is meaning that you're now seeing people pile into Egyptian bonds. $3 billion is pretty chunky in the context of what we're seeing here in Kenya and what you're seeing in Nigeria. So I think that's a significant statement of appetite. And, as I said previously, Egypt will be the first to get the cash because they know how to speak to the market. They've got an attractive double-digit return, and people are probably comfortable with the FX risk at this moment in time because the dollar is so soft across all these exchanges and markets. With respect to gold prices, it's quite interesting. One of the most militant people in Egypt is Naguib Sawiris, the Orascom telecom entrepreneur, billionaire. He's been on social media very aggressive about Ethiopia and how Egyptians should respond. and he has the biggest gold interest there as well, just to point that out. And for now, investors are looking through the noise of Libya, which is on the border, and Ethiopia, and looking for these very juicy returns and are prepared to put money to work. Algeria, obviously it's been a tough environment. They've run down their reserves. They went on a big spending binge, and now they've got a hangover to some extent. And I'll be interested to see whether the EBRD comes in and supports them. They wouldn't have a hangover, of course, because they're in North Africa and they probably don't drink. But yeah, so overall, I think a bit more stability coming into that Maghreb region.
Interesting. The Maghreb region is very interesting scenario. Some are looking forward to Greece, to Spain for a handshake. I think Tunisia is trying to form a joint chamber of commerce with Greece so that they can continue to be warm towards the European Union. Again, looking at if you have about $2 trillion on the table for the ECB within the EU period, I'm going to warm towards you because I can see some of that coming through to me, like you mentioned, the EBRD and the rest of them. Thank you so much. What's in other news this morning as we wrap up? I want you folks to weigh in on the AFDB story for just about 1 minute to wrap up the show. The COVID-19 spending by the AFDB continues into COVID-19, $27 million, as I said at the earlier part of the program, for the African Union CDC, and a bit of that money, about $1 million, will go to the Union Rapid Response Unit and what have you. So this is good news here. So let's just spend about 1 minute. Ijeoma, let's just have your views very quickly on the AFDB spending across Africa as far as the pandemic is concerned.
Well, yeah. So we know that this is really the time for multilateral organizations to basically step in and support the fight against the pandemic, the fight in containing the pandemic more appropriately. We've seen other major multilateral organizations, the IMF, the World Bank. We've even seen the AFDB launch support countries financially with the fight against the pandemic. And really, this is just the AU's. This is really just the AU's, commitment to this. $27 million is a lot of money, even though it's not, coming in the same vein as the billions of dollars that we've seen from some of the larger multilateral financial agencies. Their support against, the support for countries to manage the pandemic. So it will definitely be useful, and it will definitely help to create, some bit of stability both in the economy, health-wise, and also in the economy.
Okay, thank you, Ijeoma, for being on the show. Let Ali wrap this up for us. This helicopter money to kill the virus, as it were, and its impact on economies from South Africa to Rwanda to Ghana and now straight to Addis Ababa, where the AU itself is. Do you think Adesina's team and his team are making a good show of themselves as number ones, a DFI on the continent?
So let me first commend President Adesina getting a clean bill of health from this independent committee. I think it's well deserved. He's a dynamic Pan-African. He's shown strong leadership at the helm of the African Development Bank, and he's always had a vision of the future, which I always warm to. I like what he's doing. He's doing high velocity, not small denomination, but meaningful interventions. He's helping all these countries. I think I would like to see more involvement from the AFDB. Maybe they set up a unit with a degree of expertise looking to assist these countries, deploy that money effectively, and monitor how they're spending it. I think that's really important. But overall, when the tough got going, Adesina got going, and the African Development Bank as well. So I think they've got to be commended for that.
Thank you, both of you, for being on the show today. Ali Kansachu in Nairobi and Ijeoma Onyeka in Lagos. Thank you very much. Have a great day, and we'll see you again tomorrow here on Frontier Opening Bell.